Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome. My name is Brandon Wendell, Chartered Market Technician, and I'm going to do a little analysis on the U.S. futures index equity markets, or equity index markets. Starting off looking at a comparison chart, starting at January 4th, you can see on this daily chart that we were being led downwards by the Russell, followed hotly by the NASDAQ. And in the rear, we got the S&P, and the Dow is begrudgingly moving to the downside. So we're going to focus on the leader here, which is the NASDAQ, the Russell first. So we'll go ahead and just maximize this chart here and get it over to the Russell. There we are. So starting off in the big picture, actually weekly chart, we're going to need a continuous in order to see the history there. And let me clean up my chart. You can see on the drop, we've got nothing but selling pressure going on right now. And we are coming into an area of possible demand. Let's see what this looks like here. We got rally, base, and rally. So we're coming into that, though, with a lot of selling pressure. Doesn't look like that's going to hold up as a demand zone. We may try to seek out the next level of demand, which is right here at about 1807. So we got a lot of bearish pressure here as we close in 1905 for the week. Going down to the daily time frame, again, kind of looking back here on that continuous contract, we actually sought out the daily demand. If we fine tune this a little bit more, we'll zoom in so we can see it better. You've got, there you go, drop. Well, actually, no, take that back. It's this right here, drop, base, and rally. So you only have the one basing candle there. So we got 1988 to 1920 is our area of demand. And then the next daily demand area, if we want to fine tune that weekly, there's really two of them there. So you've got rally base rally right there, and then the rally base rally a little bit lower as well. And getting over to current price, seeing what's going on, as we're coming into this zone, you can see we've got way too much bearish momentum to stop. So I don't see us bouncing here. If we do, it'll be a short-lived bounce where we get a small retracement before continuing to the downside. As far as the daily supply, our nearest one is going to be this 2120 to 2168. You got drop, base, drop right there. And we can also set up to take a look for retracements, but we don't know the bottom as of yet. So once we start actually seeing a bottom being put in, some bullish pressure, then we can start to focus on where we might likely bounce to. And let's go down to the 4-hour time frame. There we go. Now we can kind of fine tune this a little bit more and see where we might go if we do get a retracement. Again, this may need to be adjusted if we continue to sell off on Sunday going into Monday of this week. But as of right now, our nearest 4-hour supply zone that is likely to cause us to push back down a bit actually lines up right here. Oop, wrong one. Sorry, I want to put that as my zones. There we go. Just above the 50% retracement, 61.8%. So you could almost argue that it may be a reaction to some previous area, but this is really our nearest supply at 2076 to 2104 with the Fibonacci retracement value inside at 2093. See if there's anything different there. No, that's pretty much it. I mean, again, on the daily chart, we had the overall impulse down here. So it looks pretty bearish. And right now we are impulsing after a small correction. So doing this, you can see that we actually came right to the 61.8% extension of the previous impulse down. So that may be all we get on this pullback, or sorry, on this continuation. We may be getting ready for a little bit of a bounce. That's what this is suggesting. And we do have a positive divergence here. So with all of that together, you got a positive divergence. We just hit a Fibonacci extension of our previous impulse. This is all suggesting that Sunday going into Monday, we might get a small retracement, meaning a bounce, move to the upside. But it's going to be short-lived, and we're just simply going to be looking for new shorting opportunities to continue out the week. So it's kind of like we did last week, where Monday, Tuesday, we started to rally a little, and then the rest of the week we just sold off. Well, we're going to see something like that. Actually, it wasn't Monday because we had the holiday, but either way, we should get a couple days maybe of rally before we sell off continuously. Let's go down to the 60-minute time frame, see if we can fine-tune any of this. And no, nothing really changes, honestly. It's the same area. The only thing you might have are just some pauses along the way at the 23.6, which is 2025 or 2051. We could resume the downward trend at any one of those areas. And then once we do continue that downward trend, we should be targeting about 1942 initially, and then ultimately go all the way down to that next daily demand at 1853. So, kind of previewing what I'm expecting for this week is this: prices are likely to give us a small bounce up. And again, I'm not sure where it's going to stall out. It could be this 23.6, could be the 38.2, could be all the way up to 50% and the supply zone. Then we should be continuing to move to the downside later in the week, all the way down until we reach 1853, our next target. We could get a little pause here, though, at 1879 along the way. So looking at the NASDAQ, that's the next market to look at. We go to the weekly time frame again, and let's see what we got going on. Very bearish. We have not actually broken 40 though on the RSI. It's kind of interesting. So we've made almost the same low as we did before. Let's see here. The low was 366.75, and we haven't quite gotten there yet. And the fact is, we have not broken below 40. In order to make a new low, we usually need to go below 40 on the RSI. So the fact that that hasn't happened is suggesting there's a little bit of underlying bullish pressure here. Going down to the daily time frame, let's see what's up. We're hitting any kind of strong demand zones here. We got no divergence, so this is still suggesting downward movement altogether. And actually, let's go to a continuous. That way I can see what's going on as we go back in the past. This is left over from last week, I think. I had this as a weekly demand, yeah. And same thing, we're not breaking below 40, but we've gone very deep into that demand. I don't see it holding very well. Going down to the daily time frame, I want to see where's our possible stopping point. Where are we likely to pause again? And while we're at somewhat of a demand zone here, I don't see this holding long term. We could get a little bounce because you have a rally-based rally right there. That's a demand. And if we go a little below that, the next area of daily demand is right here. Did that wrong? There it is. Rally, base, base, and rally with follow through. It's not as strong though, because you can see kind of a small candle to the upside. It's a little bit weak. As far as stronger daily demand, well, this one may have already been tested. Let's see. It was close, didn't quite, but that's a little bit better. You see the stronger buying pressure coming up. And then finally, we've got way down here near that weekly demand. Let me clean this up. And we're looking at rally, base, 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 and rally. This one might also, yeah, that was also one that's been tested right there. Just want to make sure I mark everything. This one's kind of wide. I don't think that's going to be a good zone. It's just too wide of a zone compared to the height. But along the way, we have plenty of areas to stop anyway. So here we are hitting the tested zone. This one's not likely to hold, but it could cause a little bit of a bounce, just like we saw in the Russell. And what I would look for is continuation of the downward move once that happens. So if we're looking at the Fibonacci, again, retracements, we don't know where this is going to bounce yet, but hypothetically, if we continue moving down before we bounce, and we might bounce early, just because we're not at demand doesn't mean we can't bounce. The leading market that's been dragging us down was the Russell. So if the Russell finds demand, even though the NASDAQ, the S&P, and the Dow may not be at demand, they could still bounce anyway because the Russell, which was leading us, ends up giving up. So you got to follow the leader at all times and watch to see if that leader is reversing. It'll cause the other laggards to actually reverse as well. So that's kind of what we're seeing going on. That's why I focus on the Russell first. Going into the 4-hour time frame, let's see if there's anything along the way that lines up. No, the nearest supply zone is here. And that's a 78.6 retracement. So there's nothing else along the way. So once again, we may continue to move down or we may pull back a little bit. Look for one of these fib retracement areas to give us a new push down. Actually, if we retrace from where we are now, that's where we're going to be. That lines up a little bit better. So next week, if the Russell starts to rally, look for the NASDAQ to rally as well to one of these fib levels before it continues to push down towards the end of the week into this daily demand or even lower. That's what I'm seeing. Go down a 60-minute time frame. And nothing really changes here. This is actually a supply zone on its own. Drop, base, 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 and drop. And that's right in with the 23.6. So If we get a weak retracement, we could just go into this supply zone and the Fibonacci level inside the supply before we move down. That'd be a great short at 14,695. So keep an eye out for that. Again, target number one would be 14,180. Target two, 13,823. So actually, I also want to go back to the daily chart for a moment, and we'll do the specific. And looking at this, I just wanted to see a 20% retracement in price. Where does that put us? The high, the all-time high was back here. See, this is only a 14% retracement that we've received so far. So to get a 20% retracement, that would officially put us into a bear market. And that price level, I believe, is going to happen. I think we're in the bear market. We started off, and that's going to basically take us down to 13,415 ultimately. So remember, we were looking at on the daily chart. We haven't moved down to that area yet, but on the continuous contract, see the high, all-time high was right here at 768. So I have it on this continuous 767. It's about the same. So again, we had that 20% retracement that I'm kind of expecting to have happen for that bear market signal. And well, it's pretty much our area of demand that I marked way down here, 13,500. So I don't see us stalling before we get there. I see us just little pauses, but continuing to move down. Moving over to the Dow, let's see, again, starting off big picture, clean this up, go to a weekly chart, and we are very, very weak in price and still not in a bearish trend, although showing lots of weakness. We're still making higher lows, but just barely right now. So the daily time frame, again, we're experiencing big bearish move, but could experience a bit of a retracement if that Russell starts to pop a little to the upside this week. I don't see that as a long-term move back up. As I said, I think we're overall bearish in the markets. So in the daily, I don't see any kind of supply. 240 as we go down in time. Now we run into a little bit of selling pressure that we can mark off as supply zones right here. And that lines up with the Fibonacci retracement of 50%. That's a pretty good target. So if we start to rally on the Dow has actually been the strongest out of all the markets, been trying to hold up, but I would expect it to rally up towards that 50% area. You might be able to get some short-term longs there before we continue to push downwards. And if we do continue to push down, I don't think I had any demand here because we were using, previous contracts. So I'd have to go to the continuous to be able to find any kind of targets in this case. Or again, going back to the daily time frame, we could project. So if this is what happens, what I'm anticipating, we had the impulse down, we get the correction back up to that level. Should be, what is that, 127 area? Close enough. That would give us downside target number one of 33,718 after retracement, and then downside target number two, if it continues to go down, which I believe it will, down to 32,843. As far as the bear market signal here, oops, can't see that. That would be the 20% retracement from the all-time highs. That's got quite a ways to go, as you can see, because the value of this is so high. So we're looking at a move all the way down to roughly that 2.618 extension. So it'll be interesting to see if there's anything along the way that could stall us out, but that's definitely what I'm seeing for the future of these markets. Let's go to the continuous. And on the daily chart, just going back to see where we might stall, we have a tested area of demand here. The fresh area demand is at 30,000. I think that's it. Or no, is that only a 10% pullback? Hang on. No, that's our retracement. That's our 20% right there, is to that 30,000 area. I think that's very viable to happen this quarter, perhaps. So lots of bearishness starting off the year. I think it's going to continue. We go back to the S&P, and pretty much the same picture. So looking at the ES, we are getting down towards this daily demand, which is where I believe that we'll get a bit of a bounce. So I don't think we're done with the downward move in the markets. If we do get to that area, I'm looking for a retracement, and we may retrace early Again, if the Russell starts to push off the lows on Sunday, it's going to take all these markets up with it. Kind of curious to see if we completed. Nope. The Fibonacci extension was actually to take us to that demand zone, 43.54. So this is suggesting that we're not done on the move in the ES, and that we should be able to continue that push to the downside. And therefore, if we do, oops, wrong one. Here, I wanted to continue that extension down or retracement. There we go. See where we're likely to retrace to. We do have supply right around 61.8% retracement of the downward move. Right there. And we also have another one above, just in case if it shows a little bit more bullishness, like the stall out right around the 78.6 of 46.33. But as of right now, I think that we're still going to move down a little bit, possibly bounce at that 43.50 up to 45.58 before we continue the move downwards to fresh lows. And again, if I go back to my daily chart for some of those next fresh lows, let's see where they are. Oh, we don't have anything on this time frame. We have to go to a continuous again. So we're looking at some pretty bearish opportunities coming up here in the short term. Well, not short term, long term. So again, look to see if we can bounce off the 43.50 area, then look for new shorts either at 45.94, or let's see if there's anything before that if we go down to a 60-minute, and there is. This doesn't look very good for a zone, actually. So I might just have to wait for that other. Just be patient. Or wait for new zones to form. This just doesn't look good. We have, again, kind of, drop. Let's see, drop, base, base, drop. Now, I guess we do have supply here at 23.6. So if we start to rally off the 43.50, we could end up getting short here at 44.50. As you can see, it's 23% retracement from those lows, and it's a zone. Drop, base, base, drop. So that's what I'm looking at for this week for the equity markets, expecting a small bounce early in the week and then continued selling pressure. So pick your battles, look for the right supply zones to join that downward move that's likely to continue for a bit of time here in those equities. Until next time, trade safe, trade well, everyone. Take care. Make sure to hit subscribe and like. Let me know if you enjoyed the video, and I'll talk to you again soon.